Hey, what's up, everybody? The precious metals are on fire today. Gold, silver, platinum, palladium, everything is in the green and pushing up much higher as I'm recording this video. Why are the precious metals up today? And what are the current prices of all the precious metals, gold, silver, platinum, and palladium? We're going to get to all of that on this video. Please consider hitting that thumbs up button on the video and let me know your thoughts, your opinions in that comment section below. First, let's discuss the prices of the precious metals, and silver is leading away. Silver currently up 2% even, or up 62 cents to $31.48. Gold is the next leader, second only behind silver. Gold is up 1.83%, or up $43.50 to $2,415.20. That's right, gold is once again above $2,400. Platinum is up 1.31%, or up $13 to $1,015 even, and palladium is up a little bit over 0.5%, or up 0.61%, or up $6 to $1,026. Now, why are we seeing a decent size update for the prices of gold and silver and pretty much all the precious metals? And lately, whenever we see a pretty big beatdown, or if we see a decent size gain, we can look no further than some government data that was released. And that's what we had for today. The CPI data, or inflation data, was released today. Now, whether you believe these numbers or not, or whether or not these numbers get revised sometime down the road, whether that be 2 weeks, 3 weeks, a month, maybe a couple months down the road, I have no idea. But the report is inflation for the month of June has cooled. And this is according to a CNBC article that says inflation falls 0.1% in June from prior month, helping the case. And this is the other reason, and which I believe is the biggest reason why the precious metals are up decently today, and that is the case for lower rates. Will Jerome Powell cut rates starting in July? At least in my opinion, I don't think so. We're going to take a look at the CME Group FedWatch tool in this video and see what the update is, what the updated possibility for a rate cut in July or even in September. And I think that's the strongest possibility, is going to be one rate cut starting in September. Are we going to see it? I don't know. But I would like to reference this article from CNBC, and it says the CPI, a broad measure of cost of goods and services, declined 0.1% from May, putting the 12-month rate at 3%. Now, Jerome Powell has said over and over again that they want to see 2%. That 2% goal. He says it like a broken record. He says a lot of things like a broken record, but also he says it over and over again that their goal is 2%. We're not at 2% yet. Will we see 2% at least? Will we see 2% on paper? I don't know. Will he cut rates even if we do not get that 2%? Very good question. I don't have the answer to that, but it says putting the 12-month rate at 3%, around its lowest level in more than 3 years, excluding volatile food and energy costs. Now, as volatile as it may be, I don't think they should be excluded from any inflation data, because as volatile as it may be, everybody needs food every day. We all need to use some sort of energy every day. but they like to exclude in a lot of this inflation data food and energy. So it says excluding volatile food and energy costs, the so-called core CPI increased 0.1%. Now, this is what Jerome Powell likes to look at more times than not. That is the core CPI data, which increased 0.1% monthly and 3.3% from a year ago. The annual increase for the core rate was the smallest since April 2021. A 3.8% slide in gasoline prices held back inflation for the month, offsetting 0.2% increase for both food prices and shelter. Now, where I am at, I'm not seeing any sort of a slide in gasoline prices. The best case, I'm not seeing gasoline prices really going up a lot, but I still paid just a couple of days ago about $3.85 for 87 octane 87 gasoline. So I'm not seeing any sort of a major dip in the price of gasoline, but that's what that is saying. The monthly inflation rate dipped in June for the first time in more than 4 years, providing further cover for the Federal Reserve to start lowering interest rates later this year. The Consumer Price Index, a broad measure of cost for goods and services across the U.S. economy, declined 0.1% from May, putting the 12-month rate at 3%, around its lowest level in more than 3 years. The Labor Department reported Thursday the All Items Index rate fell from 3.3% in May, when it was flat on a monthly basis. The annual increase for the core rate was the smallest since April 2021. A 3.8% slide in gasoline prices held back inflation for the month. Once again, let me know in the comment section below if you are seeing a 3.8 or anywhere near a 4% decrease in the prices of gasoline where you are from, offsetting 0.2% increase in both food prices and shelter. Housing related costs have been one of the most stubborn components of inflation and make up about 1/3 of the weighting in the CPI. So a pullback in the rate of increase is another positive sign. And here we go. It says the June inflation report means the Fed is one step closer to a September rate cut. And that's what the speculation has been, folks, is a rate cut in September. Now, to be fair, they were also saying back in February and March, everybody was speculating for a rate cut in June. Well, we didn't get that rate cut in June. And it looks like we're not going to get a rate cut, at least in my opinion, and according to these so-called experts and people that write these articles, that we're not going to get a rate cut. And even according to the CME Group FedWatch tool, that we won't be seeing a rate cut in July. Will we see that rate cut in September? Let's talk about it. Let me know what your thoughts are about that in the comment section below. Would this be a political move? And after September, will we see these numbers revised? I don't know. Your guess is as good as mine. But it says one step closer to a rate cut, said Chris Larkin, managing director of trading and investing at E-Trade from Morgan Stanley. A lot can happen between now and September 18th, but unless most of the numbers pivot back into a hot territory, the Fed's reasoning for not cutting rates may no longer be justified. And I agree with at least one thing that was said in this little paragraph is anything can happen between now and September 18th. Other than that, I don't like giving predictions. I leave the prediction making to the smarter people than I. Then it goes on to say, in addition to the pullbacks in energy prices and the modest increase for shelter, used vehicle prices decreased 1.5% on a month and were down 10.1% from a year ago. The item was one of the main drivers in the initial surge in inflation back in 2021. The tame inflation report meant that real average hourly earnings for workers increased 0.4% monthly, though we're still up just 0.8% from a year ago, according to a separate BLS report. While Fed policymakers target inflation at 2% annually, and oh, by the way, we're still not there yet, the June CPI report provides further ammunition that the trend in the prices is headed in the right direction. Now, which prices are we talking about? Because the prices, at least the prices that I'm seeing at the gas pump, the prices that I'm seeing at the grocery store, those are still not there yet. And the rate of inflation going forward is still not at 2%. Will he start cutting before we get to that so-called, and I'm using those air quotes, 2%? Your guess is as good as mine. We're going to have to wait and see. The CPI peaked above 9% in June 2022, prompting the Fed to respond with a flurry of interest rate hikes that concluded in July 2023. Since then, the central bank has held its benchmark borrowing rate in a range between 5.25% and 5.50%, even as inflation has fallen sharply over the past few years. Again, still not at that 2% annual target that Jerome Powell often speaks about. Now, even though I keep saying that and we're not at 2% annually, I'm not saying he will or will not cut interest rates. I'm just saying that that's what the man says consistently. If there's one thing that he's consistent in saying, and that is a softening of the labor markets, and his goal is inflation rate of an annual 2%. So I guess that's not the one thing that he's consistent in saying, but the two things that he's been pretty consistent in saying at these press conferences as he's been over the last couple of years, raising interest rates and keeping rates unchanged or keeping rates higher for longer. Well, there you go. There's a third thing that he's pretty consistent in saying, and that is rates higher for longer. Following the report, traders in the Fed funds futures market increased their bets that the central bank would lower rates starting in September. Well, with that being said, I think this is the perfect time to head over to the CME Group FedWatch tool and see what they are saying that the possibility is for what it will happen to rates in July and in September. So the next meeting or the next decision is 19 days, 23 hours away from the recording of this video, and it is showing that for the month of July, or July 31st, 2024, the possibility of rates remaining unchanged is 91.2%, and 8.8% possibility of rates being cut by 0.25%. But then we bounce over to September, and September is showing, as of the recording of this video, and like that article that I was just reading said, anything can change between now and September the 18th. But for September the 18th, 2024, which by the way is the last meeting and the last decision for the Federal Reserve for the interest rates prior to that November the 5th, Tuesday, November the 5th, 2024, presidential election here in the United States. But it is showing for September the 18th, there's a 84.6% possibility that rates will be cut by 0.25% for the month of September. 7.3% possibility that rates will remain unchanged, and a 8.1% possibility that rates will be cut by half of 1%. So this is showing, according to the CME Group FedWatch tool, that there's a greater chance, a slightly greater chance, that rates will be cut by half of 1% than staying unchanged. However, the greatest possibility is rates being cut by 0.25% or a target range of 500 to 525. And by the way, are you ready for rates to be cut? Now, just to be clear, I don't know if rates are going to be cut. We were tricked before. When there was a 66% chance or a possibility. I think it got as high as, close to 70% possibility that rates were going to be cut in June, but they were not. Probably not in July. Will they be in September? Your guess is as good as mine, but are you ready for it? I appreciate everybody for taking time out of your day to watch this video. Please let me know your thoughts, your opinions in that comment section below. If you enjoyed this video, found this video informative, please give the video a like, a thumbs up, hit that like button on the video. Let me know your thoughts, your opinions in that comment section below. Thanks everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.